All right, so let's start to look at this presentation. My name is Jess Roberson, again, coming from Weber Hartman Freihofen Partners, and we're going to be talking about unlocking the Swiss banking system. So before we jump into this presentation, I want to share a slide with you guys that I think is very relevant and highlights why people, especially Americans, should even be interested in understanding the Swiss banking system and its relevance in the world today. So here in this slide, we see the banking sector's size relative to the GDP or gross domestic product of its own country. And what we're looking at here is the assets that are under management and compared to the gross domestic product of the country. As you can see on the far right, the US has over 100% of its of assets under management in its banking sector compared to its GDP. And all the way over on the left, we see Switzerland that has over 500% of assets under management compared to its GDP. Different countries, different economies, but it shows the size of, in relative nature to what the jurisdiction is and how many assets they manage. And I think it's valuable to have in your head as we move forward and look at some of the numbers of the banking system of Switzerland. So now let's look at the content of what we're going to be covering today in this presentation. First, we're going to start off with the development of the Swiss banking system. We're going to talk a little bit about the history and where the Swiss banking roots came from, where it started and how it developed and why it developed into where it is today, which is then we'll talk about the Swiss banking system of today, what it looks like, how it's regulated, and the players involved. Then we'll talk about independent asset manager as a part of that system and what that looks like and how they can help Americans. And then we'll talk about offshore investing with WHVP. All right, so before I get going, I want to introduce myself so you guys know a bit more about who I am. Again, my name is Jess Roberson. I'm one of the team members here at WHVP. My roles here cover administration and back office work, as well as marketing, marketing strategy, digital content creation and implementation, and investment research when the investment team needs some help doing some research on potential investments. They ask me to be a part of that. Before I was with WHVP, I spent 10 years working in international organizations around the world, mostly in Central Latin America and the South Pacific. Before I met my lovely wife, who is Swiss, as you can hear, my accent, I am an American living here in Switzerland. I moved here with my wife about 5 years ago, and we really enjoy the Swiss nature, and we're often up in the mountains exploring everything that it has to hold. And in my free time, I play for the Swiss national rugby team, which is a joy. We've had a lot of success this year, and I like being able to compete at the international level for the country of my wife. I did my education at the University of Southern New Hampshire, where I got my bachelor's degree of science in finance and international business. Since I've been in Switzerland, I've learned German and then the Swiss German dialect, and my mother language is English. All right, so enough about me. Let's jump into the history of Swiss banking. So to start, you have to have a little bit of a picture of how banking was able to grow in Switzerland and get its roots. And that's where you see the military neutrality of Switzerland that dates back to the 1500s when they started to be recognized as neutral and took the neutral stance. They currently and have not belonged to any power blocks. And as well, they don't pursue any foreign agendas. They stick to themselves as an independent country. And this has allowed them over time to really show a proven track record of a stable economy. They were able to avoid both world wars and even going back into history, major conflicts. Switzerland was able to stay relatively free of any conflict, which allowed them to actually be that stable economy that would allow for banking to grow. So when you look back to when banking started in the 1500s in Switzerland, it was when northern Italians and people from southern Germany, traders, would come through and do business in Switzerland, and they needed a place to store their finances that was safe and away from political turmoil and unrest. and that was Switzerland. And that's where you see the banking services start with wealthy Europeans, royal Europeans, and business merchants really starting or being the initial clients for the private banking sector, which really evolved in the 1700s. What was a big piece of that in the 1700s that really you see that tradition or the spoken tradition and the lived tradition of client privacy, um, which was brought about because the Swiss bankers got a reputation of high quality service and discreteness with their clients' information. And this was kind of the building blocks of Switzerland being able to develop, hundreds of years worth of a private banking sector and um, a to be known as that private banking um, prestige that they have today. All right, so what does Switzerland's banking sector look like today? So the graph you see here on your right, we'll get to in just a moment, but we want to look at what is it made up of. And so currently there are 243 banks that operate inside of Switzerland. When you look at this on a bank to population ratio, so you have essentially the population of Switzerland is over 8 million, and that means there's one bank to every 36,000 Swiss residents. To give it a comparison to the United States, if you look at the United States banking sector, which is huge, there's over 4,000 banks. It still represents a one bank to every 68,000 Americans. So you can see there's a higher number of banks per capita in Switzerland than there is in the US. And I think that really highlights the competitive nature of the Swiss banking system and also the prestige that they have and people wanting to use their banking system. So currently, the assets under management as of 2021, so a bit of a lagging figure, but the numbers for 2022 have not come out yet. That report's still being compiled, was 8.83 trillion Swiss francs. It's quite interesting because Switzerland really has a unique expertise in private banking. As we looked in the previous slide, the history of Switzerland is in private banking, and where that differs from the typical or generalistic business model of the United States bank, which is more commercial or corporate investment banking, is they focus on generating their revenue stream through their clients through fees instead of allowing clients to deposit their bank or their assets in the bank and use those the cash that's in the bank to make investments. So that's quite interesting. Another portion that is fascinating to look at in this graph is to see the difference between the amount of assets that are being held by people who live in Switzerland and versus those who hold assets in Switzerland and who live outside of it. So when you look at the total cross-border wealth being managed in the world, it's about 10 trillion Swiss francs being held around the world through cross-border wealth. Switzerland manages 2.5 trillion of that. So 25% of the cross-border wealth is managed in Switzerland. What is an interesting fact in 2021, in the midst of the pandemic and world crisis and an unsure market, is we saw the Swiss banking or the private banking sector grow by nearly $1 trillion. Over half $1 trillion came from people who were living outside of Switzerland. The other half came from people who are already in Switzerland. So people immediately came to Switzerland in a time of crisis so that they could have security in the Swiss banking system in a country that was neutral and was drawing a lot of capital to the country in times of crisis. So let's talk now about the Swiss banking regulation. So who regulates Swiss banks and how is it looked over? So there's the Financial Market Supervisory Act, which is an umbrella act that is monitored, or the institutions in the financial services industries are monitored by the Swiss Financial Market Supervisory Authority, which is the watchdog that ensures all of the financial players are living up to that standard, that they meet those standards and they comply with them. Then you have the Basel III framework that sets an international standard for the bank for banks in terms of capital adequacy, stress testing, and liquidity requirements. Another thing that's here, Basel is one of the major cities in Switzerland. This accord and this agreement after the financial crisis in 2007 to 2009, this is where the international community came together to figure out these issues of the banking sectors. And again, it just shows that people come to Switzerland when they need international cooperation and they need a clear path forward when it comes to banking services and negotiating any kind of dispute or problems that are facing the world. Then Switzerland has the deposit protectionary scheme, which guarantees clients deposits at the bank, and this deposit protectionary scheme ensures 100,000 Swiss francs are insured at each bank account that the client has. Then you have the banking laws of 1934. In this set of laws is where you saw the Banking Privacy Act, which is Article 47 of those laws, come into law. Before, in the history of Switzerland, it was the standard procedure that there was this confidentiality between the bank and its clients. And in 1943, they solidified that, imposing criminal charges on bankers who disclosed clients' information outside of it, as well as hefty fines. So it's a very well regulated market, and the financial players really have to stand up and show high standards to exist and operate in Switzerland. So now I would like to talk about what do asset managers, where's their place, and what's their part in this system. So there are over 1,500 asset management firms in Switzerland. Currently, right now, half of them are governed by FINMA, meaning they received their FINMA license, their allowance to operate, and the others are currently working on getting those allowances. It's a joy that we get to say we have that. We made sure we were compliant and walked through those processes and got the FINMA license. So we're one of the half that's being governed now by FINMA. When you look at how many assets in Switzerland are being managed in the banking system that are being managed from foreign clients in the asset management industry, that's 33%. So 33% of those finances that are in the banking system from foreign residing clients are managed by asset managers. Currently, there's 63 asset managers in Switzerland that are SEC registered. I think the point here is when or if you're looking at a asset manager in Switzerland for offshore investing, it's important to find one that is SEC registered. One, because now those asset managers have essentially two regulatory bodies looking over them with FINMA and SEC to ensure that they are holding high standards. And the second point to that is the companies who are SEC registered will have a track record of dealing with Americans, understanding the needs of Americans, and complying with American law. And this really can just give a bit more understanding between the client and the asset manager, and give a little bit more peace of mind that nothing shady. It's all the companies in order to the standards of the U.S. as well as Switzerland. So this graph that you see, or the diagram that you see here on the left, this is the setup of what it looks like to work with an asset manager, where the client is clearly the pinnacle, and an asset manager then becomes the partner through a limited power of attorney, and has set up contractual agreements with custodian banks in Switzerland, and the client then is the one who goes with the asset manager to open the account in the name of the client. So the client is the full owner. The asset manager is there as the helper to help manage the investments, and if there's a problem or a concern at the bank, to have the understanding, the expertise, and how to deal with the bank on the client's behalf. So what does it look like partnering with an independent asset manager? So first, you have an independent partner with personalized service. What this means is if you go to a bank, potentially they're going to be getting the investments that are suggested to them by their investment team, and there could be products in there that um, might not necessarily fit or are connected to the bank. Um, and the personalized service here is that independent asset manager is totally separate of that. So they're really only looking for the best needs of the client to understand what investments you already have in other places and making sure that the portfolio that they're building on your behalf actually fits what you need. Personalized service really shows a big difference when you're talking about banks versus independent asset managers. When you go to a bank for an investment account and you get a relationship manager, you're going to be one of hundreds client, one of a couple hundred clients of that relationship manager, and you're going to be more of a number because of the sheer mass that they're dealing with. In a relationship management, if you go to an independent asset manager, you're going to be maybe one of 50 to maybe 100 clients, and so they're going to know you at a deep level. They're going to understand your needs and know you on that first name basis, so that they can really help you and build the things and the portfolios that you want. Then you have continuity and access to owners. At a bank, if something's not good and you don't like the services or they don't fit, you have to leave that bank, but maybe you liked the relationship manager there. With an independent asset manager, you're going to get a relationship manager that you really like, that you can get to know over time. And maybe the bank that you originally started with isn't meeting your needs or what you want, and you're going to be able to switch custodian banks but keep the same relationship manager. So you don't have to start a whole new process of finding someone that you can trust. You can really work with the same relationship manager over time and continue to build that relationship instead of always having to start over. The direct access to owners is independent asset management companies are small. And so if there's a problem at the bank, the owners get involved quickly. And if you as a client need to speak with the owners, or if you have issues or want to talk with them, they're much more open to access to speak with the clients. Then you have focus specialization, which really hones down into what the asset manager does. So in the case of WHVP, we invest outside of the US dollar, outside of the US markets, and we can really focus on building a portfolio that diversifies your overall structure and benefits your wealth in general. Then you have the choice of custodian bank, which we talked about a little bit about choosing multiple custodian banks. And when you go to an independent asset manager, they've set up contractual agreements that can usually lower the lower minimum investment size. For us, we've been able to set up contractual agreements that drops the lowest minimum size to 250,000 US dollars as a minimum investment. And there's a little bit more weight when you go with an independent asset manager. A lot of banks require 1 million as a minimum to invest. Some even require much more, from 3 to 5 million. So with an independent asset manager, there might be a few more doors open for those who are interested in getting invested outside of the US and getting into Swiss banking. Then you have a broad network of partners, which allows you to expand or get in contact with partners and a network that the independent asset manager set up, whether it be for lawyers or any other financial needs with a CPA. You can ask your independent asset manager and they can give you people they've built relationships with and they think that you would be in good hands with. Moving on, I want to talk about the advantages of offshore banking. First is you have geographical diversification. In the US, there's a lot of political change, instability sometimes. And in Switzerland, having something that's separated from that, those turmoils can help your wealth structure, can be beneficial. Then you have the different portfolio emphasis, as we mentioned, outside of the US dollar. So you, instead of getting portfolios that are crossing each other with different investment managers, you're going to have a portfolio that's really focused outside of the US, and you're not going to get any crossover into what you already have. Then you have enhanced privacy and asset protection. With privacy, again, the Swiss Banking Secrecy Act makes it illegal for any banking or financial service person to share the information of their client. And that means essentially only you and the people you have to report your account to will know that you have anything in Switzerland. So nosy neighbors and frivolous lawsuits, they'll have no idea that your finances are even in Switzerland, that you have a portion there. And again, overall enhanced stability, that's just talking about getting a globalized portfolio, not just sitting in the US market, which is a great market. It's huge, but it still misses 60% of the investment market that's out there. So now I'd like to introduce you to our team. This is our team. We are led. I'm Jess. You can see me there in the middle. And our three managing partners are to my right in the picture, with Julia Fernandez in the middle, Jamie Freihoff just right of her, and Urs Freihoff de Rose. They're a married couple. They're the owners of our company. And then all the way on the far left, we have Danny Kohler, our head of compliance and legal. All right, so let's talk about the investment. So what do we actually invest in? What are we looking at when it comes to investment selection? So first is, we're long-term capital preservationists when it comes to setting our strategies. We're looking for the long term, not the short term. We want to see sustainable growth and preserving the strength of your wealth. We exclude all U.S. markets, as I've mentioned already, in the U.S. dollar. We avoid those totally. We do direct investments in stable economic environments. So we're talking stocks, bonds, currencies, and precious metals. How we come about selecting those investments comes from a top-down approach. So we first assess the country, what's their situation, what's their economic situation, what's their political situation, how attractive is their currency, how is it performed, how is it posed to perform in the future. And then we look at industry attractiveness when we've highlighted a country that has a good currency and a good economy. And then we see what their strengths are in industries. And once we've assessed the industries that we think have a potential for the future and sustainability, we start looking at who are the right players, who are the value players in that industry, in that country. And then we really get down into the investment, the nitty-gritty details of investment research. All right, so let's now move on to the process. So what does it look like to open up an offshore bank account? So the first step usually starts with the introduction call or a video meeting where we sit down with you. You get to know us more on a personal level. We get to know you on a personal level. And we can talk about what your financial situation is. What are you hoping for? What are you looking for in the portfolio or in moving assets offshore? We can talk about the bank, the service that you want to use, whether that be, for us, we have three services. We have a standardized portfolio service that has a minimum investment requirement of 250,000 US dollars and a 1% management fee. Then you have a asset management firm service that is 500,000 US dollars minimum investment. That's a tailor-made portfolio. So we really look at what's going to fit everything that you have, what's going to be the most beneficial to you. And that's a 1.5% management fee. And then finally, we have our concierge service, which is a minimum investment of 1 million. It's a 1.5% management fee and a flat fee of 10,000 Swiss francs. That comes with 24 hours of concierge service and a personal visit to you wherever you want us to meet you in the world. So those are kind of our services in a brief. If you want more details on them, just shoot us an email, and I will be glad to tell you more about which service our services, and you can decide which might be interesting to you or questions you'd like to know more about. So in that phone call, we talk about those, as well as what bank you would be interested in, or what we think might fit you, as well on the account type. Is it going to be a sole account, a joint account, a trust account, a foundation account, an IRA, or an IRA LLC, an offshore trust? So that's what we can kind of determine in that initial call. And we can answer questions that you have. And then when the mutual decision is reached between us, we would like to move forward, then it goes into providing basic information on your background and your finances. So who you are, what was your working history, what's your current investment that you want to put in, and the source of funds of that. So how is that money generated? Then you have your residency. You need your address, obviously, to open up a bank account and a passport copy. Once you get those, we can go on behalf of you to the bank to get the account opening set. Once the bank gives us the account opening set, we pre-prepare a lot of it for you so that it's clear and with the information you've already given to us, and we send it to you to read through to ensure all the information is correct, to understand everything that's in the account. And when you sign, fill everything out, and return those to us, we pass them on to the bank, and then the bank goes through their compliance checks, opens the account, and it's made ready to be funded. Once it's funded, then we set up our initial investment meeting, which during this time of getting the account opening, we've been researching investments that we think are going to fit you and your portfolio well. And then we discuss those investments with you, anything you don't like, anything you really like, anything you want to see more of. And we discuss those investments. Once the investments are agreed upon, then we move forward with the investment process and ongoing communication. So we ensure that we set up calls with you, depending on how you like it, once a year, twice a year, 4 times a year, quarterly. We really make sure that we want to stay in communication with our client and how they want to be, and how you want to be communicated with. We love getting emails from our clients and answering questions. We are very active on social media, doing these webinars, putting out a economic analysis report every 6 weeks for our clients that we send to them, as well as ensuring that we're giving them content that's interesting. And if clients find things interesting, we always want them to send that to us so that we can discuss things with them and hear what you're interested in, and then share with you guys what we are seeing and interested in. All right, so let's move on to the tax considerations. This is one of the last slides here. So the tax considerations for Americans, there are tax considerations. We are not tax specialists, but there are things that we need to pay attention to ensure you're compliant, we are compliant, and that you're aware of. So first is U.S. tax reporting. U.S. citizens have to report on their global income. It's unfortunate, but it's the reality that exists in this world. And so you need to make sure that you're reporting. We make sure that the banks that we work with make sure they have a tax statement prepared for you, in the sense of all of the information that would be needed in a tax information for your CPA or for you to fill out your taxes. There's a tax report that the banks give to you so that you have the information needed to report properly. Then there's the withholding tax that is levied on investments when they are, these are the withholding taxes on dividends and coupon payments of the investments. This is 35% in Switzerland. However, at the end of the year, when some paperwork is done, this can all be, or it can be, the majority of it can be reclaimed from the bank on your behalf. So it's something to be aware of, and to know that it's reclaimable, but it takes a little bit of paperwork at the end of the year. Then you have the Swiss turnover tax, which are small tariffs levied on purchasing equities. And so you have, for Swiss equities, I believe it is 0.15%, and for non-Swiss equities, it's 0.3%. Very small, but again, they're there and you need to be aware of them, so that there's no surprises. And then we have investment considerations. Again, like I said, we are long-term capital preservation focused. So our investments, we're looking at these investments being there for 3 to 5 years. It doesn't mean we won't take short-term gains in certain situations, but in general, when we select an investment, we really ensure that these investments are long-term focused, that we're not going to be creating a tax consequence for you in the short term. All right, so I have come to the end of my presentation. I want to thank you guys for being a part of this presentation. I hope you found it informative. We're going to start our Q&A now. Also, we have some resources at the bottom when you get the slide decks that you can check out. which is where our website, where you can find us. If you have a question, our email is there at WHVP.ch, as well as our phone number if you want to give us a call. We do a podcast each month called the Swiss Money Secrets Podcast. If you're interested in hearing what we're thinking about or part of our networking, we bring guests on. It's a very interesting listen and valuable short podcast under 30 minutes. And then we have our blog and obviously all of our social media handles that you can check out.